Hey everybody. The tax bill that was passed earlier this month has raised lots of questions for lots of my clients. So I am going to try to do small short videos of some of the most relevant provisions in this tax bill. The first one I want to talk about is the extra $6,000 deduction for seniors. So if you're 65 or older, if you turn 65 in the year 2025 or you're already past age 65, you get an extra $6,000 deduction. They call it an extra standard deduction, but you can take it even if you itemize. So most of my senior clients do not itemize on federal because, by 65, you don't have a lot of those big deductions like mortgage interest and things. Now, some do have a lot of deductions for medical or for charity, so they may itemize. But the standard deduction for single taxpayer, age 65 or older, is $17,000 this year. You get an extra $6,000 on top of that. So that would be $23,000. For married filing jointly, this year's standard deduction is $30,000, and then you get the extra bonus for being over 65, $3,200, and then another $6,000 each, which is $12,000 with the One Big Beautiful Bill Act. So married filing jointly couple, both over age 65, would get a deduction of $45,200. So that means that the first $45,000 would be that you earn from wages, from pension, from Social Security, would be tax-free. Now, Social Security formula is different. Most of you know that you don't pay taxes on all of your Social Security as it is, but what remains taxable, that goes into that income, and you take all this deduction out of that. I picked a couple clients. I picked one married couple, both over age 65. They have interest, dividends, capital gains, pension, Social Security, and a rental property. Their total income was $189,000, and they will both get the additional $6,000 each for $12,000 deduction. So that, and they're in the 22% bracket. That will benefit them $2,125 of tax savings, that extra $12,000 deduction. Now, because their income is $189,000, they are subject to a little bit of the phase out of that $12,000 deduction. It starts at $150,000 and the phase out ends at $250,000 for married. So at $150,000, it starts to phase out that extra $12,000 deduction. They're only going to get $9,660 of a deduction, but it's going to help them $2,125 on their tax bill. So, second example I looked at, a single lady. She still works. She's over 65, but still works. So she has wages. She has a little bit of she took out some money from an IRA or 401k, so she had a little bit of retirement income. Her total income was just $37,000. Well, she's going to get the entire $6,000 deduction because single, the phase out starts at $75,000. She only made $37,000. She gets the whole $6,000 deduction. In the 12% bracket, where her tax in her income tax bracket is 12%, that's going to save her $720. She got a refund last year of like $40, so she would actually get a $700 refund this year instead of just $40. The previous couple I mentioned, they actually owed taxes. They owed a substantial amount of taxes. We had to do some fixing of their withholdings this year, but if they owed $8,000, now they're only going to owe $6,000 because that $2,000 savings from that extra $12,000 senior deduction. So, couple other things. Let's see. You've got to file jointly if you're married. So married filing separate does not count. I really only have one that I can think of off the top of my head. A couple that file separately over age 65. So, but you have to file jointly. It may benefit that particular couple to file jointly now. We'll have to see. We'll have to crunch the numbers and see if they want to do that. So anyhow, $6,000 each, 65 and older. Phase out starts at $75,000 for single, $150,000 for jointly. The phase out ends if you make over $175,000 single. You don't get this extra $6,000. If you make over $250,000 jointly, you don't get any of this extra $12,000 deduction. So if you have any questions, you just reach out, and every situation is different. There's no easy answer, as you'll see, and as you've probably heard me say before, when you ask a question, the answer to a tax question is it depends. There's no clear answer because every situation is different, every income is different, and so many different things can go into calculating your tax liability for the year. So, hope you have a great day. Let me know if you have any questions about it.